Hello, everybody. Welcome back. So this is the third video of the series where I'm analyzing Bajaj Auto. So in the first two videos, you saw how Bajaj Auto makes money, and we also considered, some important things going around their business, like why their sales went down and things like that. Now, let's look at the consolidated financial statements. Okay. So here it is. Let me open the annual report. So just to like if someone who is not familiar, so in Indian annual reports, you usually have the standalone and consolidated. So standalone is where only for that business, their own parent business they report, and in consolidated they also report for the subsidiaries and the joint ventures and associates. So like let's say if they have an operation in another country that is usually as a is not the parent company, it's a subsidiary. So they consolidate everything. So if you are trying to get the real picture of any business, a large business especially, you should look at the consolidated statements. So let's look at the balance sheet and try to figure out, let's see in the high level, uh, what it means. So again, if you are not familiar with the financial statements, what it is, I would recommend you take up any basic course. It's not rocket science. I'm an engineer, and I've never had any accounting background, but I was able to figure out. I started reading here and there, and slowly I was able to figure out that how balance sheet, income statement, and cash flow are correlated. So if I can do it, you can definitely do it. Let's go ahead. So now in the balance sheet, the first thing is the assets. In the non-current assets, if you can see, they have the property, and then they have investment in subsidiary. Then these are, so it's not that complicated. They have all those factories and everything. They have all given that in they've stated it in the cost, and they keep depreciating that. And then they have the investments in subsidiary, which we'll be looking at in the footnotes. And then all these are the other investments they have made. Basically, they're pretty liquid investments. They're not anything crazy. And so that's how they have the total assets of around 15,800 crores. Okay. Now, if you look at uh, so that's again the non-current. Now they have similarly current assets of about 5,000 crores investments, and trade receivables of about 1,500. That means they have all those dealers and all. They are waiting for their money. So obviously there is always a business cycle. They don't get paid right away. So if you buy a motorcycle, you might get paid after a certain time. The company from the dealer, and then they have a cash of about 775 crores. It's kind of a little bit high, but I guess they want to be a little safe, and everything else. So there's nothing alarming here. The only thing, what I first thing I do is I look at the receivables, and then I compare it with the payables. I'll tell you why. So here in the current liabilities, you see the trade, payables. Now, this is always a very good sign. So, if you look at it, they have 3,200 crores of trade payables, and they have about trade receivables of about, sorry, where did I go? Current uh, trade receivables of about 1,400. Now, what does this mean? This means is that the payables are all towards their vendors, right? The people who make spare parts and things like that. So the Bajaj Auto is able to hold on to the money and pay them later, and they're still okay with it because it's such a large company. They give so much business to them. So this only shows so much confidence people are having in the business that they are okay to wait. So Bajaj, it's not like, then again there can be reverse also. You can have a large payables. If you don't have money, that's a big warning sign. That means the company might not survive for a long time. But over here, Bajaj Auto is a very liquid company. They have all this, investment sitting here, so they could just pay off those people right away next day. But they still, why would they do it, right? It's not a smart business thing because they can make interest here, and so basically they have a negative working capital. So if you think about it, so current assets minus current liabilities, if you take out the cash that they are not using for the own business, they have a negative, which is very good. So that's a very positive sign of a business. This only shows it's very sound, and people have a lot of confidence in their capital uh, position. So then other than that, if you see at non-current liabilities, uh, they have some sales tax deferral. We'll look at that, which is not that much, the provisions, and then they have deferred tax liabilities and a government grant of 46 crores. To be honest, I don't even know what that means. But many times I figure out things that I don't know. To be honest, I don't think anyone is there who can understand every line of annual report. But guess what? This is always, you should have a thumb rule. If that figure is very less compared to the overall, you can ignore it. If let's say this government grant would have been like 5,000 crores, yeah, and if they don't have anything, I would literally stop analyzing Bajaj Auto, because I have one simple rule, which I'm sure every sound investor would have, is if you don't understand anything and you even have a little bit clue that it can be a big impact, do not even try to analyze that, because that means you're trying to analyze something which is totally unknown, which again comes to what, like speculation, right? You're just speculating. You're like thinking, oh, okay, maybe that thing government grant might be because they got something. So don't make up things. So if you don't understand, just tell yourself you don't understand. And if it's a big thing, there are more than 400 companies, top class companies in Indian stock market where you can invest. You can stop this, put your effort somewhere else, try to go and figure out something else. So that's my advice. So here I don't exactly know, but it's because of it's small, I don't care about it so much. And then I have the current liabilities that we already saw what they mean. So now their book value. So obviously assets minus liabilities is book value, which they call as equity. It's about 20,000 crores. Okay, so 20,400 crores. And now let's look at the income statement. Okay, here in the income statement, you can see already we saw the sales of 25,000 crores. Other operating revenue, we'll look at it in the down. Like they've given a breakup. I think they sell some spare parts and some other small investment income they get, and that overall is about 26,000 crores. Now, so out of 26,000, about 16,000 is the raw material cost. Okay, so again, if you are trying to actually figure out what's the percentage gross margin they have, then you need to divide this. So 25,000, you need to divide this, because these other things are nothing to do with selling motorcycle. It's some other thing. So if you think about it, so 25, 16, you do just a simple math, it's around 60%, right? About 62%. So for every if a motorcycle is, let's say, I'm just making up 100,000 rupees, 1 lakh rupees, for about more than 62,000 is actually spent on raw materials and components. Uh, it's not like something, but you need to always remember the that it's a large part. But another kind of little bit good news is it's a variable cost. That means, let's say next year for some reason the sales go down, this will also go down, because then they'll have unless until they have some contracts with certain vendors. But most of the things, if the sales go down, even this, they have the right to buy less of this, and they keep control. So uh, there are many different businesses. So that's one good thing about auto, especially two wheelers, is like, your fixed costs are really less. Now think about it in a different way. You are a refinery, okay? Now, your fixed costs are huge because, or like let's say, not like refinery. Let's say like, I'll take railroads. Okay, well obviously in India it's Indian Railways, but in America they have the railroads are the publicly traded companies. They have to invest a huge amount of money, and they have to have huge infrastructure. And if let's say their shipments go down, they still have to apply that. Maybe their fuel expenses can go a little bit down, but they have a fixed cost, so there the risk is higher. So always I see, when I look at the expenses, what is a fixed versus variable. Variable is I'm a little bit more happy, that means you've got less risk. Fixed means more risk. Just keep that in mind. Then the next higher cost is again, there is other expenses, which is always there, which is about in the note 27 we'll see later on. They have other than that is the employees. So they pay about 1,000 crores overall to the employees, which is okay. I mean, if you think about it, it's about 4% of their overall sales. Uh, like that's uh, that's fine. It's not like huge, but sometimes the wage pressure can cause like things in the bottom line. So when you're projecting that, maybe be a little bit more conservative. That means put a little bit more growth in this uh, the wage part. Uh, Other than this, another important part to note is the excise duty. You see, like it was 1,300 crores and it came down to 400, even though the sales have almost been like actually a little bit more. It's because the excise rate has gone down. Okay, now this is a really important part. You need to understand it's a total political thing. A new finance minister can come, or the government can change, and this can shoot up again. So in your projection, you have to have a balanced rate for this. So let's go down and now look at the footnotes. And in the footnotes, let's look at other expenses. So that's note 27. Let's go down and I can directly figure out here what's note 27. So note 27 is page 199. Okay. Okay, so here you can see the other expenses. It's a long list of things. Now here, obviously you don't have to pay attention to every small thing, like like payment to auditor, like 1.6 crores. Okay, whatever. I mean, even if it increases by they double it, it's still not going to be a lot of difference. But then they have here the biggest was advertisement, 437. So obviously, uh, because the market is growing, so it's becoming more expensive to reach out to consumers. Actually, that's a thing people are noticing because it's more demand. The consumers are being reached by so many different people. So you have to pay to reach to a consumer. You have to pay to get their attention. So the advertisement cost will be going up in a higher rate than what it was in the past. I can definitely say that. Now, second thing which is important is where is the packaging and material here consumed. This is uh, this is kind of always stable, so a company can be, you know, they can uh, they can figure out ways to keep this in like in control. So that shouldn't be that big of a deal. And then there is repairs and machinery and all. So overall, what I would say is that the other expenses, as they're called, it's